Welcome to TradeWinx software. Placing a trailing stop-loss order. 1. Find out if you can use a trailing stop-loss order. Not every broker will allow you to use this strategy. Likewise, not all types of accounts will permit a trailing stop-loss order. Be sure to check if your broker allows this type of transaction. It is highly recommended that you have the option to use this order. 2. Track the historical movement of your stock. It is helpful to understand the historical volatility and price movements of your stock. This will give you an idea of how much the stock moves up or down in a given period of time. Use this to determine a reasonable trail value that balances between triggering a premature sale and leaving too much profit on the table. 3. Choose when you want to place the order. You can place a trailing stop-loss order anytime. You can do this immediately after the initial purchase. You can also track your stock and decide to put in the trailing stop-loss order later on. 4. Choose a fixed or relative amount. As noted, a trailing stop-loss can be created in one of two ways. You can either use a fixed price or a relative one based on a percentage. For example, you can determine either a strict dollar amount, for example, $10, for the trail or a percentage of the stock's value, for example, 5%. In either case, the trail is related to the value of the stock. This trail changes over time as the price of the stock changes. By using the fixed dollar option, you limit to a strict dollar value the amount the stock can go down from its highest point before a sell order is automatically placed. Dollar amounts cannot have more than 2 decimal places, in other words, no tenths of a cent. 5. Determine a reasonable trail value. Figure out how much you'd like your trailing stop-loss to be. Talk with your broker to determine an appropriate dollar amount or percentage for your trailing stop-loss order. If you set the value too tight, you might trigger a sale prematurely. If you set the value too wide, you might leave too much profit on the table if the stock begins to fall. 6. Choose between a market order and a limit order. A market order is an order to buy or sell the investment at the best current price available. A limit order allows you to set up the purchase or sale of stock at a certain price. Once you reach the stop price that you've specified in your trailing stop-loss order, you can put through a market or limit order. This means that you will sell your stock. 7. A market order is a default order. It will execute without regard to price. Give us a call +918 3910 94408. Register now www.stockbuysellsignal.com.